And welcome everyone to our financial literacy workshop series, the Center for the Women of New York. My name is Cecilia Venosta-Weigel. In case you don't know me, I'm a volunteer, the president of the center. I've been doing it for almost 2 years now. Tonight we have our Keep Your Assets Safe Home and Auto Insurance. Our guest speaker is Kathleen Carroll. Thank you, Kathy, for being with us. In case you're not familiar with the Center for the Women of New York helps women overcome financial, violence, social, wellness, and legal issues by raising awareness and advocating for full gender equality for women, understanding their needs, and connecting them with CWNY services such as this one, nonprofit partner organizations, and public resources to aid, uplift, and address their challenges. We do have 2 locations. We are in Queensboro Hall. We have an office there. And we have a building in Fort Totten in Bayside, New York. Our current programs are referrals and advocacy program. So if you don't know if we have a service, you can always call us. We have, as I said before, partner organizations that can help you. So we'll guide you in the right direction. This series, financial literacy, career workshop series, also once a month. That is a noon, I think the second, third Tuesday. We just changed it, so I'm not remembering the exact date. Lana, do you remember what days is that? The career workshop series. I think it's the second Tuesday of the month at noon. Now. I think that's it. But everything is on our website, and we'll share it later. We have women in crisis support groups. Both they're over the phone, but we're starting a new hopefully in person if there's enough interest, enough registrants, Queensboro Hall. That would be the second week in January. If there's not interested and there are not enough people, we'll have it via Zoom. We do have the one-on-one tax preparation assistance by Kathy Carroll. She will help you file your taxes, and that is in person and it is in both locations. So stay tuned for dates, but we're thinking it will be Thursdays from 11 to 4. Once a week, starting the beginning of March. And then we do have a garden and sustainability workshop series at Fort Totten. We have a beautiful garden, so join us if you can. An ESL class, a legal support team that responds via email. We have yoga classes also in person in Fort Totten. That's Wednesdays at noon and Thursdays from 6 to 7 p.m. We just started self-esteem workshops. We're very uplifting, and that is once a month, also on Thursdays evenings, and that's the second Thursday. So join us for anything that you think would help you or you may benefit from. If you'd like to watch any of our virtual events that have passed, you can find them at cwny.org/past-events. If you have any questions during this workshop, please feel free to post your questions in the chat or in the Q&A feature. They will be addressed at the end of the presentation. If you did dialed in, you can email your questions to events@cwny.org. And Lana, our awesome volunteer, will be checking the email for questions. Thank you again, Kathy, for being here with us. I will turn it over to you, and I hope everyone finds the webinar helpful. Welcome.
Thank you. Thanks, Cecilia. Thank you for having me back. This is the first presentation this fall for our CWNY Financial Literacy Series, and this is entitled Keep Your Assets Safe, Home and Automobile Insurance. The first question is what is insurance? And what does one think of when they hear the word insurance? Do you think of a green gecko or a lemur or a duck or a woman in a white outfit? These characters certainly grab our attention and hopefully make us think about the insurance protection we need to protect our homes, autos, and assets. They're certainly entertaining, but they really don't project the seriousness of having insurance for your properties and autos. Insurance is defined as protection against possible financial loss. Now, this is from the workbook that we've been using throughout the financial literacy series. That's the Focus on Personal Finance by Kapoor is the author, the 6th edition, and this definition is on page 247. Although a multitude of insurance types exist, including home, auto, personal property, flood, life, health, etc., tonight we are going to address the first 4 topics. Life and health insurance are very complex and diverse topics, and that will be the subject of next month's webinar on December 14th. What do insurance companies do? An insurance company, the insurer, is a risk-sharing business that agrees to pay for losses that may happen to someone it insures. A person joins the risk-sharing group by purchasing a contract known as a policy. The purchaser of the policy is called the policyholder. Under the policy, the insurance company agrees to take on the risk. In return, the policyholder pays the company a premium. The protection provided by the terms of an insurance policy is known as the coverage, and the people protected by the policy are known as the insured. This is also from Kapoor. We're going to be seeing a lot of quotes from this workbook in this webinar. Insurance and risk. Risk is the chance of loss or injury. Loss and injury are not predictable and can happen at any time, as shown in the Allstate commercials through the character of Mayhem. He's another guy promoting insurance on TV. Because of risk, an insurance company takes a chance every time it issues a policy. Personal risks, property risks, and liability risks are types of pure insurable risks. The insurance company will have to pay only if a covered event actually happens. Pure risks are accidental and unintentional. That's from the textbook. Risk shifting. The basis of having insurance is to shift risk. This is whether it be the risk of a car accident, a burglary, or a storm. When one has a policy, the risk is shifted from the individual to the insurance company. In exchange for your payment of the premium, the insurance company agrees to pay for your losses. Most insurance policies include deductibles. A deductible is the set amount the policyholder must pay per loss on an insurance policy. A deductible is the portion of the risk that the policyholder must pay on their own if a loss occurs. For example, auto insurance policies may typically have deductibles that range from, let's say, $500 to $2,000. It usually differs from policy to policy and company to company. This is the amount that the insurance company expects the policyholder to pay on their own. That's not covered by the insurance if a loss occurs. So if there's a situation where a loss is not that great and it's not covered by, it doesn't exceed the deductible, then the policyholder may not want to even put the claim through the insurance company, because if they're going to pay the deductible themselves and the claim is less than that, it just might not be worth it to even put the insurance company into the picture. Homeowners insurance. Homeowners insurance can protect your home and your belongings. Coverage can include your home and any other structures on your property, additional living expenses if you cannot stay in the home, like let's say you have to stay in a hotel or something like that, or be outside your house while they're fixing it or making it livable again. You can have your additional living expenses paid for that. Personal property and personal liability. Homeowners insurance will protect you against financial loss if your home is damaged or destroyed. This would include garages, sheds, landscaping, and other site improvements of the house. Household belongings and personal property may not be covered in full, but are instead covered as a percentage of the value of the building. Typical portions are 55, 70, or 75%. That's as per the workbook. Personal liability. One of the most important aspects of homeowners insurance is the protection against personal liability. This coverage will protect you and your family if others sue you for injuries they sustain, or if your property is damaged or their property is damaged while they are on your property. The coverage will also pay for attorney's fees to defend you against any lawsuits. Although most homeowners realize the importance of having their property properly insured and would have it in place in any event, banks and lending institutions will require you to have homeowners insurance in place at all times. In fact, prior to purchasing a home, the buyer must obtain and produce a paid bill for the premium at or before the closing. Very often, the lender will escrow the future premiums and include them in the new homeowner's monthly mortgage payment, along with principal, interest, and real estate taxes. And there's also an additional situation here. If you have a mortgage and for some reason your policy is canceled or you don't pay the premium, the lender, bank, can what's known as force place insurance for your home. And usually that's at a much higher rate than the policy that you would normally have. But they're allowed to do that because they need to have insurance on their collateral at all times. Now, this is auto insurance. Every state in the United States has a financial responsibility law. This is according to the workbook. Financial responsibility laws require drivers to prove that they can pay for any damage or injury caused by an automobile accident. All states have laws requiring people to have motor vehicle insurance. Penalties for driving without insurance include fines, suspension or revocation of your driver's license, or even the possibility of going to jail. Auto insurance includes protection for bodily injury, as well as protection for property damage. Bodily injury liability covers injuries caused by an accident for which you are responsible. Costs covered include legal expenses, medical costs, lost wages, and other expenses that may be associated with injuries. Liability coverage is usually expressed as three numbers. For example, you may hear people talking about, oh, their coverage is 100, 300, 50. These amounts represent thousands of dollars of coverage. The first two numbers refer to bodily injury coverage. As shown in this example, $100,000 is the maximum amount that the insurance company will pay for the injuries of any one person in any one accident. The second number, $300,000, is the maximum amount the company will pay for all injured parties, two or more, in any one accident. The third number, $50,000, is the limit for payment for damage to the property of others. Now, many people don't have coverage, the coverage with these high amounts. This is a policy that would cover a person that has a lot, a fair amount of assets. A lot of times younger people may have lower coverage, maybe let's say 20, 50, 10, or something like that, because they would not have many assets. But it's usually better to have higher coverage if you can. And people that may have quite a bit of assets may also want to have umbrella coverage, which is a separate policy in addition to auto insurance with these kinds of coverages. Automobile insurance property damage coverage protects one from financial loss if you damage someone else's property or if your vehicle is damaged. It includes property damage liability, collision, and comprehensive physical damage. Some states, including New York State, have a no-fault system where drivers involved in accidents collect from their own insurance companies. And under a no-fault system, it doesn't matter who caused the accident. Now, this is from the New York State DMV website. This is the minimum coverages for New York State for the no-fault insurance. So the minimum coverages and amounts of insurance that must be purchased to satisfy the financial responsibility requirements needed to register your car and obtain license plates include, this is just here in New York State, no fault, personal injury protection, to pay medical expenses, lost earnings, and other reasonable and necessary expenses. For example, household help and transportation to medical providers for a driver or passenger injured by your car. Liability, to protect against the harm your car or any car you drive with the owner's permission might do to other people and their property. And uninsured motorists, to protect against the injuries you, your family, or your passengers might suffer in a hit-and-run accident or in an accident with an uninsured vehicle. So when anyone goes to get an automobile policy, they would have to have these three items at the very minimum included in the policy. Similar to the requirement for homeowners insurance when buying a house, the purchase of auto with financing will require additional insurance above the minimum requirements that we just looked at. Auto lenders will require additional collision coverage until the loan is paid off in order to fully insure the value of the collateral, which would be the new car. Leasing companies will also require this coverage. So in a case where someone has an older used car, they may be paying a lot less for their insurance than if you have a brand new car with a loan on it, or if you lease a car, because of this additional coverage that's required by the lenders and the leasing companies. Now, this is personal property renter's insurance. So this is like homeowners insurance, but it's for tenants. And while it is very important to understand and have insurance if one owns a home, statistics show that 67% of New York City residents rent rather than own their place of residence. And that's from the New York City Renter Statistics and Trends from Value Penguin. So if a person wants to get renter's insurance, they can get $25,000 of personal property coverage. This type of coverage would protect movable goods, furniture, clothing, electronics, and things of that nature. And it says, in most cases, renter's insurance protects your things wherever you take them. So if you took them out of your apartment, took them someplace else, and something happened to them, they would still be covered. Then, like homeowners insurance, the renter's insurance also covers liability. And this example is $100,000. The renter's insurance covers your personal liability as well as your property. This includes medical costs for injured guests and damage to other people's properties. So that's almost exactly the same as the homeowner's insurance. The renter's insurance would also have a loss of use coverage. This would be $50,000 worth of loss of use coverage. This is just an example. And this is sometimes called relocation expenses coverage. Loss of use coverage pays your expenses if your apartment ever becomes inaccessible or unlivable. So like the homeowner's insurance, if you can't stay in your apartment, you have to go someplace else, this renter's insurance will cover it. Now, the renter's insurance is actually very reasonable. It was advertised on this Value Penguin website for $187 annually. So that's $16 a month with a $500 deductible. Again, the deductible being what the insured would have to pay themselves in a situation of a claim. Renter's insurance provides valuable protection for tenants who may be under the impression that their landlord's insurance will protect their belongings, which is generally not the case. So it's, people that are in apartments really have to think about having insurance too, because they may have quite a lot of stuff that they need to make sure that it's covered. Now, the next thing is flood insurance. And flood insurance has gotten a lot of publicity over the last few years with all the storms that we've had and flooding conditions and people's homes really getting destroyed. So insurance companies really don't like to deal with flood insurance, but they have to. So a flood is considered to be an excess of water or mud on land that is normally dry. The National Flood Insurance Program defines a flood to be a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land, or of 2 or more properties, at least one of which is the property holder, from an overflow of inland or tidal waters, unusual and rapid accumulation of runoff of surface waters from any source, mud flow, or collapse or subsidence of land along the shore of a lake or similar body of water as a result of erosion, undermining caused by waves, occurrence, or waters exceeding anticipated cyclical levels. So this is a good thing for people to have flood insurance with all the storms and things that have been going on, very unusual conditions. While floods are the most common natural disaster in the United States, insurance coverage for losses from floods is not provided in standard homeowners or tenants policies. Yeah, this is very important to note too, because this flood insurance is a completely separate type of policy. Insurance for flood damages is generally available under a separate policy issued through the National Flood Insurance Program and available to homeowners, renters, and businesses. Homeowners may purchase flood insurance covering up to $250,000 of flood damage to your home. A standard flood policy will cover structural damage, including damage to the furnace, water heaters, air conditioners, floor surfaces, including carpeting and tile, and debris cleanup. The contents of your home are not covered under a standard flood policy, but for an additional premium, you also may purchase flood coverage for up to $100,000 of damage to your personal property. So all these things are all separate situations that have to be considered. So when you get a flood policy, you would have that in addition to your regular homeowners or renters policy. And then you would have to look into these additional coverages if you wanted to have them. That would be damage from flood would be a separate situation than damage from, let's say, a fire or something else happening to your apartment or your house. Coverage for basements, crawl spaces, and ground level enclosures on elevated homes is limited. If your home has these spaces, be sure to ask your insurance agent about any restrictions on your coverage. So this was what happened after Superstorm Sandy in 2012, when many people were required to elevate their homes. The reason that had to be done was so they didn't have to have the flood insurance, because these portions of their house wouldn't be covered anyway. Flood is not covered under your basic renter's insurance policy. Talk with your insurance agent about flooding risks. Now, if anyone wanted to find out if their house is in a flood zone, you go to this website, the FEMA Flood Map Service Center, and flood zones are shown on the FEMA, which is Federal Emergency Management Agency maps. This is a federal agency. It's in charge of all natural disasters and floods and things like that. And when you look at the map, a lot of times your property may not be in a flood zone, but I'm finding in my experience that insurance companies will ask you if you're within a mile of a waterfront. So even if you're not in a flood zone per se, according to these maps, you may have trouble getting a regular insurance policy, or they may want you to have flood insurance in addition to your regular insurance policy. So thank you for your attendance, and please join us next month on Wednesday, December 14th for continuation of our financial literacy series. And next month, we're going to continue speaking about insurance, and we'll be talking about health insurance, disability, and life insurance. And hopefully everyone will have a happy and safe Thanksgiving. And thank you for attending.
Thank you, Kathy, so much for your presentation. It is so crazy that I mean those tips are so helpful. Let me. Sorry, I just want the slide. I'm going to stop sharing for a second. I want to give everyone the opportunity to post any questions that you may have on the chat or raise your hand, and I can unmute you. And you can ask me questions. In the meantime, I just wanted to mention how important these tips are. I never knew about a renter's insurance, or at least I didn't know that it was so affordable. Maybe I would have, like, I recently bought a home, and like it is required that I have insurance, but probably I would have thought about getting a renter's insurance. And I know that with these natural disasters and like so many things happening, that it could affect your home as a renter. It is something like to consider. I had another question and I'm forgetting, but again, please everyone, feel free to ask any questions that you may have for Kathleen. I had a question about the flooding, like the basement. Also, like those tips were so important. Like I would have never thought that portion of my house would not be covered, like the basement. And
yeah, that's like you find that out when it's too late, and then they don't want to cover it. And it's you think that they're covering everything when you buy these policies. That's why it's very, very important to read them very carefully and discuss with your agent what exactly is covered and what exactly is not, because then you might want to go to get an extra policy like a flood policy to cover situations like that, because over the past few years a lot of people have been losing stuff in basements, that's for sure. So
yes, it is crazy. And the other thing I wanted to mention and emphasize is the proximity to water. I was very keen, like I don't want a home close to the water. I want it high because of flooding, because of the natural disasters that many New Yorkers suffer through, and their homes being affected by it. However, you do have to consider that, like being more than a mile away. So thank you for that. Thank you for that tip.
you're welcome.
Yeah, it's just like hard. Do you have any advice for, let's say, like you are in the process of buying a house, like everyone just wants to get it done. It's like tedious and it takes a long time. And reading the small letters of a policy, it's not something that people do because, the simple fact that people are busy and may not have the capacity of. Is there any help anywhere where people can just go and ask someone like?
Well, I think that you have to be working with a good agent. It's like, there's so many different, like when, at the beginning of the webinar, we were saying about all these silly commercials that are out there. We got Liberty Mutual and Progressive and all these companies with these silly commercials, but it's important to get a good agent. Like in these cases, sometimes it's better to go, not with insurance, but in other things in life, it might be better to cut out the middleman and go directly to the company. But in these cases, I think it's good to work with a local agent. If you have one that and trust, or if someone could recommend someone to you, because then they can read all the fine print and explain it to you. And, I think in that case, a lot of times it's better, because then if you work with an agent, they usually work with a large group of companies, and they can find the best company that you should be with, instead of you just seeing maybe a commercial on TV and say, oh, I'm going to call Progressive. Maybe they're not going to be the best company for the situation. But if you have an agent, they'll be able to know your situation and to place you properly with the right coverage.
Thank you. And that's great advice. And they are there for you to ask questions, right? Like to give you the information. That's why you're hiring them as
Right.
right. So if you are getting insurance, make sure to ask all those questions. Thank you so much.
You're welcome.
Screen again. Again, if you're interested in any of our programs, make sure you check our website. have referrals, the series for career financial literacy, the support groups. If you need help with your taxes, we're here to help you in March and April, and then all the in-person programs that I mentioned before. Thank you, Lena. Lena put our website on the chat. Feel free, we encourage you to check it out. If you'd like to support these programs and become a member, we do have all the events that we suggest donation, or all our fundraisers that are fun have a suggested donation, and it's always a smaller donation for members than non-members. So we appreciate you joining us in our cause. So our website for donations is www.cwny.org/membership, and you'll find the donation link there. But if you click where on the website that Lana shared in the chat, you'll find it right away. We do have the 2 locations. Feel free to take a picture of this to find us, and you can always email us at info@cwny.org. You can also follow us on social media. Something important that I wanted to mention tonight is that next month, it's not going to be on the 3rd Wednesday, because that would be too close to the holidays. So we moved our financial literacy workshop to the 14th. That's the 2nd Wednesday of the month at the same time, from 8 to 9 to 8, 8:30 or 9, like something between that, depending on the amount of information and the amount of questions that we get. And again, Lena, thank you so much for sharing our social media links. In the YouTube channel, you can find the past financial literacy workshops. You'll see Kathy there sharing important information.